Coming up in today's video, stocks are pulling back here a little bit. The NASDAQ at one point this morning was down about 1.2%, now bouncing a little bit at the time of recording following the US Open. S&P 500 also pulling back a bit, and the Russell down 1%. We're seeing a little bit of a spike in the VIX here today as well, as the dollar continues to push higher. Let's talk about why this is happening in today's video. Now, at first glance, this is going to be a little confusing. US GDP numbers came in rock star this morning. 3.8% came out compared to the forecasted 3.3%, showing a really strong surprise in US GDP growth. So the economy is really kicking butt compared to expectations. Now, I know for the average American, it may not necessarily feel like that. For the average consumer, prices are high, things are really expensive. The labor market's not particularly great either. And so you see these numbers and you're like, what do you mean the economy is good? But remember that the economy from a high level perspective, like the overall output of the economy, is not necessarily what the every single person in the economy is feeling. It's not really fair, but that is how the economy sometimes can work. You have wealthy consumers still out there spending money, and people who have benefited from the rise in asset prices, like home prices and stock prices, are essentially the wealthy people have really performed really well, which is causing this weird division in the rich versus the not rich, and so that is a difficult component of it. But in terms of just what it means from the output of the U.S. economy, the U.S. economy is still rock star in terms of its performance. GDP growth still way above trend and way above expectations, 3.8% compared to the 3.3% expected. So why then, Nick, are stocks falling? Well, this strong GDP growth is really causing a rise in the dollar. And the reason the dollar is rising is because there's a rise in the 10-year yield. These things typically are pretty connected. So a strong GDP growth, what does that do to the bond market and to rate cut expectations? Well, if you have strong economic growth, does the Fed feel more or less likely needing to cut rates? Well, the answer is less likely. You don't need to cut rates as pressingly if the economy is still holding up pretty well. Again, it's a little bit of a strange concept, but the yields are moving higher because the bond market's saying, oh, the Fed might not cut rates as much. If GDP growth is this strong, they don't feel any sort of urgency to cut rates like perhaps the market was hoping for. So the less stimulus from less rate cuts is causing stocks to slide. Now, I personally sort of think this is a bit of an odd concept, right? This idea that you're getting good news and that's somehow bad news for the stock market. I actually disagree with it. I think that good GDP growth and not really necessarily needing rate cuts is still an environment where I like the idea of buying stocks. So if we do continue to see some dips in indices like the NASDAQ, S&P 500, et cetera, off of strong GDP growth, I'll take that as a buying opportunity because I don't necessarily think you want to pray and hope for rate cuts. I know there's many investors and traders, especially areas of the market like home builders, et cetera, that really like the idea of rate cuts because it lowers costs for mortgages and things like that, which is great. But I don't necessarily think that some of the big winners in the stock market, specifically like the mega tech stocks like Amazon and Apple and Nvidia, I don't necessarily think they need a bunch of rate cuts. And so, to me, it's like if you get those strong GDP numbers as well as the better than expected unemployment claims numbers that we got. Take a look at this. Forecast was 233,000 people filing for unemployment. We only had 218. So a little bit of good jobs data, a little bit of strong GDP growth, and yes, sure, the rate cut probabilities may dial down a little bit, which is why gold prices are softening just a little bit on this print. You can also see silver prices were rocketing and have kind of given back some of those gains due to the GDP print that came out this morning. Right? I think that these things are the higher probabilities of the Fed not needing to cut interest rates, to me, is actually perfectly fine for stocks. And if you give me a pullback in indices, I will probably take that as a buying opportunity. And speaking of the dollar, I do still think we actually may have bottomed out and have more room to the upside. If you've been watching the channel ever since Fed Day, once you had a more hawkish Federal Jerome Powell, chairman, getting all my words mixed up. You know what I'm talking about, JP, right? As soon as JP hit the stand and sort of was a little bit more hawkish on inflation, to me, that was still a sign, okay, it was sort of a buy the rumor, sell the news event, or in this case, sell the rumor, buy the news on the US dollar. Especially since then, we've had two really good unemployment claims numbers, GDP numbers, retail sales numbers, etc., that have perked up. Let me show you using the heat map. Here's a look at the US economic heat map, which has shown some rebounding data points for the dollar. Specifically, today's GDP numbers were rockstar, 3.8% growth. That's really good. Last week, we also got retail sales numbers, which were much better than expected. Came in at 0.6% month-over-month growth compared to the forecasted 0.2%. That was good. And jobless claims this week were also good. So we're seeing some bright spots in the US economy that are perking up the dollar, and for good reason. I think the dollar has room to continue to the upside. And for those of you guys who are following along and you're like, this is a lot of fundamental macro stuff and you can see how important it is, but there's a lot to learn, I invite you for free to join our Telegram channel, completely free to do, and let me show you what we're doing in there. Every single day in our Telegram channel, we are putting out research and commentary on what's happening in things like the dollar, gold, indices, commodities, and so much more. If you are not already in the Telegram channel, it's completely free to join. And like I said, we're putting out research that may help you to really learn fundamentals completely for free. You don't have to pay us for any of it. You can just come in and read a little bit of a daily digest sort of thing. If you use Telegram, again, take 2 seconds, scan the QR code that you see on your screen right now to join the free to join Telegram, or you can find it in the description down below if that's easier for you. So not only the dollar looks good, in my opinion, also so does oil prices. And I actually went long this morning on USO. We've had this downward kind of structure for a little while, and oil prices have been mostly in a downtrend for a while. However, with some good GDP growth and rate cuts still kind of on the precipice for the US economy, I think that you may actually have strong demand for oil prices, and the US economy may continue to hold up okay. So I decided to get long oil with a stop below yesterday's low. This is not a huge risk for me. If the stop gets hit, then it is what it is. But if we are seeing a little bit of a breakout in oil prices, and we could continue to see a rise in commodity prices off of the idea of the US economy holding up okay, I think the risk to reward on this trade looks really good. So this is my opinion. This is not financial advice. Do your own due diligence and make sure you're trading your own strategy. But for me, I like the upside for oil prices. And if I'm wrong, I will take a small loss. I found this trade because US oil was getting a bullish reading within the Edge Finder, a +7 score off the idea that economic data looks okay, technical score starting to show some upward trend potential breakout, and sentiment data also looks good, specifically institutions going long oil. Check this out. Last week, we took a look at the weekly buys and sells from institutions and noticed that US oil futures contracts, taking a look at the change in long contracts, they added longs, and on the change in short contracts, they decreased shorts. A very bullish week for oil. We can also see that overall, there's about a 61% of positioning parked on the long side for institutional activity recently. So I'm looking for a bigger break to the upside. We'll see if I'm right. This is the beauty of being a trader on YouTube. Sometimes I'm right in the public eye, sometimes I'm wrong. So we'll see. Again, I think there's upside. If I'm wrong, small loss. And this trade, alongside every trade that I take, was shared inside of our Discord group. This is what the analysis looked like. Feel free to pause. We'll zoom in on this section if you want to read the full breakdown behind why the trade was taken. Here's a screenshot of the trade that was shared. And again, members get noticed anytime I take a position on any chart. If you're interested in joining the VIP group, chat with a member of our support staff. They can get you set up with an extra discount for YouTube subscribers, or you can find the information to do so in the description down below if you want to sign up for our VIP signals group. Take a look at the NASDAQ here, still just filming, and from when I started, you can see we've had a little bit of bounce back already in US stocks, buying the dip so aggressively. We still have what is a roaring bull market and not something I am willing to fade. Not so bullish today though, or at least not as much of a bounce back as the Russell, which is still very sensitive to rate cuts. We'll see if this does pull back further. And looking at some currencies, we did get a little bit of a fade here on the euro dollar. Prices briefly shot through those prior highs, only to be sold into in the last few weeks as some dollar strength has come back into the picture. Same with the pound dollar. Take a look at this pretty violent reversal to the downside. And looking at the top setups page, if I just filter for major currency pairs, you can actually see something kind of interesting. The Edge Finder has flipped bullish on the US dollar with a bearish reading on NZD USD, which is again a bullish dollar position, bullish dollar yen, and bullish dollar CAD. And most of it's coming from the economic divergences between some of the key economies, specifically the dollar CAD getting a +10 score. Let's take a look at dollar CAD. And there it is, a really strong breakout here recently on dollar CAD. If you were to get a pullback into this area of prior support, I would now call this a potential demand zone and look for longs personally on this chart. To me, it looks like the dollar CAD is headed back to retest 1.3984 or so. And you can see prices really bottoming out from this clear downward trend we were in to sort of more of a consolidating period and now potentially forming a breakout point. Again, if I take a trade on dollar CAD, it will be shared inside of our Discord group. Dollar yen also breaking this consolidation zone that we've been watching for the last few months. This one looks poised to head back towards those prior highs around 150.5. And so this dollar bullishness, you may be wondering, does this mean you're bearish on metals? The answer is no. I do still like gold and silver, but I do think that they're due for a bit of a pullback. I'm not going to short them, but would love to see a little bit of strength in the dollar cause a pullback to the 38.2% or even 50% retracement in the price of gold. For context, that would put us around 3,600 or 3,550 in the price of gold. Same with silver. I'd love to see it pull back. I am a big bull on silver and gold for the longer term. And so anytime they sort of run away from me, I'm always open to waiting for a pullback, but I have not shorted gold or silver in a very long time and do not plan to do so anytime soon. And just check out this world map when it comes to national debt to GDP ratios. You can see the red marked areas are countries that have a national debt to GDP ratio in terms of a percentage form over 100%. And again, what that means is really simply they just have high national debt relative to what the economy is able to put out. And we can see many parts of Western Europe and the US and aka the West just tends to have these very high national debts relative to what their countries produce. And so with these sort of being the standing powers of the globe, it makes sense why people are rushing into gold. They're a little bit worried about these national debt levels getting so high and the ability of these countries to pay back their debts if we were to see some sort of slowdown in global economic output. It's sort of like if you were lending money to Japan or something and the Japanese economy started to really slow down, their ability to pay you back would come under scrutiny. And that's where I do think that there's some concerns around this that are leading to precious metals continuing to rise. And I know I've talked about this many times in my videos, but just take a look at long-term government bond debt, or what you can see here is like the 20-year government bond yield is still elevated. It has not come crashing down, which what this tells you is that bond investors are saying, I'm a little bit cautious to lend money to the US government because there's probably going to be a lot of inflation due to all of the national debt, that's piled up. How do you pay back national debt when you don't have anything to pay it with? You print money. What does printing money do? It means more inflation. And so more inflation makes people nervous, so they want higher yield on that debt if they're going to buy it from the US. And so again, all this sort of funnels back to what I believe is a very strong story for years to come in gold and silver. However, as a trader, that does not mean I buy it every single day or every single hour. I wait for pullbacks because again, I still want to maximize my potential risk to reward. So pullback to 35.50 and gold prices looks really attractive from a bigger picture standpoint.
Well, I've been doing my back testing. I've been trading for a while. I'm finally qualified to get a payout. Let's do it.
All right, move over, you bag of bones. I've been funded with Maven for a little while, and it's time to request a payout. Watch this. If you're looking to get funded, check out Maven Funding down below in the description. With our promo code, as you see on the screen right now, you can get an additional discount off of any of their challenges, and they offer some of the fastest payouts in the industry. Not only do they offer really fast payouts, they also have some of the best prices in the industry by far. So if you're looking to get funded, check out Maven down below in the description.
Nick, if I could start with your reaction to those latest US GDP figures we heard about earlier. And well, the US economy has grown faster than previously thought, pumped up perhaps by an ebb in imports and a pickup in consumer spending. But momentum appears to have since slowed. But GDP increased at an upwardly revised 3.8% rate last quarter. And the economy was initially reported to have grown at a 3.3% in the second quarter. So this is quite a confusing picture. Be interested to know what you feel about it and how have currency markets and other markets reacted to this news?
Yeah, Johnny. So 3.8% compared to the forecast at 3.3 just goes to show the U.S. economy continues to do what it's done for the last, 4 or 5 years, which is impress or surprise many forecasts and expectations. U.S. GDP numbers coming in this strong, to your point, may have something to do with imports and the like. But we also had unemployment claims today that came in lower than expected. Durable goods and core durable goods both came in strong. So you had this refreshing kind of strength for the U.S. economy today in terms of what was reported. The U.S. dollar index, DXY, is up 0.54% here today and breaking what has been sort of this downward trend for most of 2025, or at least trying to. We've bottomed out around that 96.50 level from late June into July. We've bottomed out and retested that area. It does look like this is causing rate cut probabilities to dwindle a little bit, which is part of the reasons why I think that the dollar is so strong today. You have the 10-year yield moving higher on this, about 0.92%, currently sitting at a nominal basis of 4.187. So you have a rise in the 10-year yield, signaling perhaps that rate cut probabilities are slightly less forecasted now. Stock market was also down a little bit here today initially, has bounced back since. But yes, the dollar strength, I think, is largely built around the idea that typically, historically speaking, the Fed cuts rates when they feel they need to, not necessarily when they want to, right? So they are typically, the bond market is a little bit more forward-looking even than the Fed themselves. Most of the time, the bond market sniffs something out even before the Fed does. And so, when we look at that, we are saying, okay, the U.S. economy may not need as many rate cuts, whereas a couple weeks ago, it was like, hey, labor market's starting to really cool. We could really use some rate cuts. Well, we've had 2 back-to-back unemployment claims numbers, which were much better than expected. GDP numbers are better than expected today. So again, I think short term, this is boding really well for the dollar and putting a little bit of a slowdown in the expectation for rate cuts for the rest of this year, causing some pretty sharp reversals in the FX world. Euro dollar lower by 0.5% today, pound dollar down 0.67%. Dollar is up against most other major currencies. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.